Hi everybody, and thanks for coming out today. My name's Kerry Noel. I'm the co-founder of Generation Mining. I've been in the business a long time. I've started 6 mining companies, 4 of which made it into production, and the other 2 were sold at the feasibility stage. So this is number 7 and probably my last. We are building a copper and palladium mine in Ontario. And we're just in the final stages of putting together the financing package to start construction. We're trading at a substantial discount to our peers. We're at 22% of our net present value based on the feasibility study last year, and 10% at today's spot prices. So there's a real value proposition there. I think the market is skeptical that a company our size can raise $1 billion to build a mine, but I'm here to tell you that that money is in the final stages of the full financing package being put together. We have about, in our resource proven or measured and indicated, we have about 4 million ounces of palladium, 1.1 billion pounds of copper, 1 million ounces of platinum, as well as a little bit of gold and silver. So a very nice, diverse project. We've got on the gold itself, that has been streamed to Wheaton Precious. Some of you who know me will know that I was a founder in 1991 of a company called Wheaton River Minerals, and hired Randy Smallwood 2 years later. And what goes around comes around. They've done a $240 million stream on this project. We're located in Ontario, just at the north shore of Lake Superior. We're right on the Trans-Canada Highway. There's lots of mines around us. We're right outside the town of Marathon. We've got the major power line in the region goes over our property. The CPR main line goes over our property. So really super well located. We also have purchased a 276-bed construction camp in town. We have all of our CBAs signed with the local First Nations as well as the local town. Just switching now into a little bit about palladium and why we think palladium is on the move today. And one of the reasons is the surge to hybrid vehicles and plug-in hybrid vehicles. So most of the palladium in our universe is used in catalytic converters in cars. So electric cars don't use it. But now that electric car market is stalling and hybrids are picking up big time, as well as also plug-in hybrids. In fact, this is a chart just shows you in the US, hybrids are outselling electric vehicles 2 to 1. And hybrids use more palladium than a regular internal combustion car, so that's one of the reasons that palladium has started to move up again. And the second reason that palladium has been moving up is because platinum, which is also used in catalytic converters, was being substituted for palladium. Now that platinum is trading at $2,700 an ounce, they're substituting back. And there's about 1 million ounces, or about 10% of the market, going back into palladium. So that's helping us. So as I mentioned, our after-tax net present value of this project is just over $1 billion in the feasibility study done a year ago. At today's spot price, our net present value is $2.2 billion. So we're trading at 10% of that. Top right-hand corner there, our payback period, feasibility study numbers, 1.9 years. That compares with companies like Ivanhoe Electric at 4 years, Foran at 4.5 years. And at today's spot price, our payback is 1.3 years, so about 16 months. Our all-in sustaining cost to produce an ounce of palladium is $781 and $2.05 for a pound of copper. If you take it just straight byproducts, our cost to produce palladium is all the way down to $100 an ounce, and our copper is actually a negative number. So very, very strong economics here. So where are we going to get all this money? Where's a little company like us going to get all the money? Well, I'll say one thing. I have raised this money before. I started a company in 2004 called Blue Pearl Mining that raised $700 million US, and then raised another $200 million after that. So I've been through this before. So I mentioned we have a precious metals stream with Wheaton. And that's on the gold and a little bit of the palladium, and that's a total of $240 million. They've already advanced us $40 million of that. We have a mandate from ING, SocGen, and Environment Export Development Corporation of Canada for $540 million debt, and that is in the final stages of being worked out. We're hoping to announce credit approval on that in this quarter. We've also got offtake agreements with Arubis and Glencore. We've got discussions with another quasi-government branch in Ottawa for $200 million in subordinated debt, and we expect to get close to another $100 million in leasing money. So we're very close to having the full amount of money to build this mine. And this is why the numbers are so compelling. If you look at year 2, our EBITDA in year 2 is $980 million, which is why we get such a fast payback on this project. So even though we're borrowing a lot of money, the debt won't be around for very long. This is a comparison slide of us and a couple of other developers. Ivanhoe Electric, which is at the permitting stage, Foran, which is towards the end of their construction phase. But this is what they're looking like now. They're both around $3 billion market cap Canadian. We're at $240 million. And if you go down to the second last line there and you look at the annual production of these companies, Foran's 90 million pounds of copper equivalent. We're 120 million, and Ivanhoe Electric is 125 million. So once this mine is built, we expect to get a rating similar to this, and that would be a 10-bagger from here where we are today. And we're not expecting to raise all that much equity in order to build the mine. People have criticized our grades because we have five different metals that we produce. So if you look at any one of them, they look kind of skinny. But if you add them all up together as a copper equivalent, we're at 0.7%. And this is a bunch of other projects. And we are in the very, very top end of the open pit copper mines in the development stage in terms of grade. A bunch of other metrics, too much detail to look at in this presentation, but this is on our website. But if you look at our price to net asset value, again, we're near the bottom of the pack. And again, that's a compelling reason to invest in this stock now. And you've all probably heard of the Lassonde curve. We are right here. If you look at where Foran was 2 or 3 years ago, they were at the bottom of this curve. Now they're up near the top of the curve, and we expect the same thing to happen with us. We've got 320 million shares outstanding. Our market cap, $230 million. Our largest shareholders are Sibanye, which is one of the largest PGM companies in the world out of South Africa. Eric Sprott is also a large shareholder. Management owns a lot of shares as well, close to 20 million shares. All of that bought and paid for. There were no founder stock when we started this company. I will say one more thing I neglected to add. We hired a guy named Clinton Swimmer, who has built several PGM mines in South Africa over his career. We hired him in October of last year, and he is building the team around him, and we expect to be announcing several hires in the next 6 weeks to build out the team that we do need to build this mine. And one of the things that's happening with all these metal prices is of course, the stock, the talent pool is getting thin. And so hiring the right people at the right time is very, very important, and we're very close to doing it. We actually have a team of people who have all worked together before and built mines together before. So, and they're very excited. Part of the excitement for them is being able to work in Canada. They don't have to leave their families to go away for 2 years to build a mine. They can live in Toronto and commute back and forth. And that's the end of the presentation. Nobody has any questions. I'll be around the back of the room after if you want to come up and ask. Thanks.